Thank all of you for attending this year's annual meeting. The theme of this year's meeting is decision-making in an era of uncertainty. And I think the theme is particularly salient in today's uncertain world. Decisions are more complex than ever, and the risks are even greater. And so today I'd like to discuss how uncertainty and political risk impact the business environment and how leaders can move from paralysis to action. We see uncertainty all around us, both natural and man-made. But the greatest uncertainty we face is the economic outlook. As Federal Reserve Chairman Ben Bernanke recently put it, and I quote, "This unemployment situation we have, the jobs situation, is really a national crisis. We've had close to 10% unemployment now for a number of years, and of the people who are unemployed, about 45% have been unemployed for 6 months or more. This is unheard of," close quote. Unemployment hovers at 9.1%, and consumer confidence remains at record lows. Consumers' assessment of current economic conditions declined for the 5th consecutive month. Americans overwhelmingly believe the country is on the wrong track, and few believe our elected officials can deal with the current crisis. And this angst is having a profound impact on individuals and businesses alike. Individuals aren't spending, and businesses aren't investing or hiring at the pace we would normally see at this point in a recovery. In a recent speech, Dallas Fed President Richard Fisher summarized business leaders' concerns this way. He said, and I quote, "Those with the capacity to hire American workers, small businesses as well as large, publicly traded or private, are immobilized. Not because they lack entrepreneurial zeal or do not wish to grow, not because they can't access cheap and available credit. Rather, they simply cannot budget or manage for the uncertainty of fiscal and regulatory policy. In an environment where they are already uncertain of potential growth in demand for their goods and services and have yet to see a significant pickup in top-line revenue, there is a palpable angst surrounding the cost of doing business," close quote. The property casualty industry sees this effect directly, both from a personal and commercial lines perspective. With respect to personal lines, individuals aren't making the big purchases such as new cars and homes that drive premium growth. Premium growth for insurers writing mostly personal lines slowed to 2.7% for the first half of 2011, down from 3.5% for the first half of 2010. And according to the latest Wall Street Journal forecasting survey, Americans' incomes have dropped since 2000 and are not expected to make up the lost ground until 2021. With commercial lines, we're seeing an increase in workers' comp claims, and businesses are not expanding or starting up at the pace we would expect. Those factors reduce the overall commercial risk exposure and negatively impact commercial lines' growth and profitability. One positive note, if we exclude mortgage and financial guarantee insurers, net written premium growth for insurers writing predominantly commercial lines climbed to 2.9% in the first half of 2011 from negative 3.1% in the first half of 2010. One of the few uncertainties that remain constant, however, is the growing regulatory burdens the property casualty industry faces. Recently, PCI partnered with the Ward Group to conduct a first-of-its-kind survey on the real cost of regulation and corporate compliance. The study found that the total cost of compliance for insurers grew almost 18% from 2008 to 2010, and that 58% of companies believed new regulations will make it harder for their company to conduct business. For insurers with direct premium written of $500 million or less, the cost of compliance grew an even faster 36% over that same period of time. And this trend is not limited to the insurance industry. Throughout the business community, there is a fear that it is becoming more difficult to do business in the United States. In my previous job before joining PCI, I had the privilege to travel to many emerging market countries, encouraging them to take the economic reform steps necessary to attract foreign direct investment and create economic opportunities for their citizens. And of course, before U.S. companies would make a decision to enter an emerging market, they would conduct an extensive market analysis for their product or service. Most of the time, however, the market analysis was not the final determining factor. No matter how attractive the market looked, companies carefully evaluated the political risk factor of doing business in a prospective country. A significant part of my agenda as Deputy Secretary of Commerce was engaging my counterparts in places like Russia, China, the Middle East, and Eastern Europe to intervene on behalf of U.S. companies for whom the political risk had become the dominant reality in doing business in that country. Potential risk factors included rampant theft of intellectual property, contract rights that were summarily violated, plants and equipment seized without due process, competitive disadvantages due to the political allocation of capital, cronyism, governments picking winners and losers, and even the failure to pay for goods and services that had been purchased. This fundamental lack of respect for the rule of law is a major inhibitor of economic growth and development in emerging economies. And I would suggest to you that American companies now increasingly factor in political risk when making investment decisions right here at home. And I never thought I would say that about the United States, but it's hard to ignore the evidence. When the EPA revokes previously issued permits for mining in West Virginia, or the National Labor Relations Board sues Boeing for building a plant in South Carolina, or more than a century's worth of established legal precedent regarding the position of secured creditors and bondholders was set aside in the GM Chrysler bankruptcy, it's clear that there are political risk factors here at home. And it's not only happening at the federal level. As many of you know, following Hurricane Irene, several state insurance regulators either unilaterally waived the hurricane deductibles on windstorm damage that are included in every state-approved policy and rate filing, or they strong-armed P&C companies to waive the deductibles. And foreign investors in the U.S. are seeing a similar trend. Each year, the Organization for International Investment releases the U.S. Economy Confidence Rating, a survey of 100 CFOs of U.S. subsidiaries of foreign companies. Now, these top executives have a unique perspective as they must justify to their foreign parent why investment and employment should be expanded in the United States as compared to other markets. A few key findings from this year's survey include that on a scale of 1 to 25, where 25 is the highest, the CFO's confidence in investing in the United States scored on average just above 14. In comparison to other countries, the CFOs believe the U.S. business climate is losing ground. Only 23% rank the U.S. business environment as stronger than other countries, compared to 39% from the 2010 survey. And why is that? According to the study, uncertainty in the U.S. political environment is one of the most important factors affecting whether or not a company will invest in the U.S. A disturbing 82% of CFOs surveyed said uncertainty is greater compared to prior years, and 95% said that uncertainty is primarily due to federal government policies. Now, in my experience, businesses are quite willing to take market risk and go head-to-head against their competitors. What they avoid like the plague are political risk, where the rule of law is suspect, the sanctity of contracts are violated, and the government puts a hand on the scale, picking winners and losers. So, is there any end in sight to the current period of uncertainty that we're living through? Unfortunately, for the next 12 months at least, the answer is not likely. But there is one event on the horizon that may help provide some clarity, and that's, of course, the 2012 election next November, which promises to be a watershed moment. The stakes are immensely high. The run-up to the election will drive the conversation for every other political and economic decision next year, and I would say is already driving the discussion in D.C. right now. The result of the election will chart our course as a nation for the next generation and beyond. All this uncertainty is having a profound effect on our ability to recover from the Great Recession. But recognizing this reality is one thing. The bigger question is, how should we act in this uncertain climate? How can you, as insurance executives, position your businesses to succeed? Now, clearly, many people are sitting on the sidelines, making a decision to make no big decisions. But for others, especially those in leadership positions, this isn't an option. Leaders still have to make decisions even with an incomplete picture. Leaders don't have the luxury to wait for the fog of uncertainty to lift before setting the course and moving from strategy to action in their business. They must sort through the often conflicting information to guide their organizations. Leaders must move from being paralyzed by not knowing all the answers that they would like to make the best decisions possible for the organization with the information they do have. And that's what we're here to talk about this week. My hope is that this conference will provide you with a framework for decision making, even when you don't have all the information that you would like. We've invited a number of respected leaders this week to share their thoughts on decision making in an era of uncertainty and to provide their perspective on the political, economic, and regulatory challenges facing the property casualty industry and the nation. We're honored to have General Pete Pace, the former chairman of the Joint Chiefs of Staff, with us today. In war, every decision is a life and death decision. General Pace will talk about how he approached decision-making and how he dealt with the fog of war. We also have the former Vice Chair of the Federal Reserve Board, Donald Cohn, with us today. Dr. Cohn will give his assessment on the current economic conditions and discuss key indicators he believes we should be looking for. Later today, Fortune's Nina Easton will lead a panel on navigating portfolios through political change, inflation, and sovereign risk. On Tuesday, Politico co-founder Jim Vandehei will discuss the political outlook and what promises to be a very historic and volatile 2012 general election. And on Wednesday, Larry Sabato, founder of the University of Virginia's Center for Politics, will handicap the 2012 elections. At PCI, our job is to help you look over the horizon and anticipate the emerging economic, political, and regulatory risk so you can make the most informed decisions possible. But even more, our job is to help shape and mitigate those risks on behalf of the property casualty industry. Finally, and perhaps most importantly, PCI is an organization with a clear mission to promote and protect the viability of a competitive private insurance market for the benefit of consumers and insurers alike. And this clear mission charts the course for our actions and will help lead us through the uncertainty.